This is the chart of silver on the daily scale. It's showing you actually the bullish alternative where it is now busy tracing an A, B, C, D, E. Yeah, we're going to have another plunge here that will be contained, and after that we will have the market, basically the silver soaring above 21. This is the bullish interpretation that in my opinion is receding by the day, but it's still there. Technically it's possible, but many of the gold stocks that I've seen are not really supporting this. But anyhow, let's go and see now the 60 minutes. And in order to get that E leg going down, we were working with the assumption that our first leg here should be treated as an A. We assumed we possibly seen a B complete, but it is not impossible that the B actually ended here. Or, believe it or not, if silver manages to climb above this level, which I'll give you the exact level, it's 17.03. If silver manages to run back to 17.03, it actually signaling that we may have seen an ABC here. Okay, I repeat, ABC. And that will call that is a three-leg move, and that is probably your A, that's probably your B, C, D, E, and that will be your triangle B. Prepare for a plunge. Okay, after this is complete, the B will simply prolong. It didn't end here, nor did it end here. It is going on sideways for quite a while. Let's go to the 30 minutes. And you can see the various options of the interpretation here. We could be looking at the B ending here, then giving us diagonal first with an A, B, C, D, E terminating right here. That's 1, that's 2 right here. Okay, 1, 2, and we are sliding now in the third wave, of which we have seen a 1, 2, 3, 4, 5 that serves as the first leg, and that's an ABC. I'm going to show you the 5 minutes, so you will see exactly. You see, if we have this as 1, 2 right here, that's a 1, 2, that's a 1, 2, that's a 3, 4, that's a 3, 4, that's a 5. So that's your 1. That's an 8, that's a B, that's a 1, 2, 3, 4, 5. If silver opens for trading and it plunges, goes under 16.6, that's the right wave count, what I'm showing you here. That means that silver will continue down for quite some time. Okay, and again, that will be 1, 2, 1, 2, and then it means it opened 2 legs, 1, 2, 1, 2. It's got to continue to deliver the remaining legs. Silver doesn't fall. Silver, in fact, remains strong, and it goes back and it jumps above this level, 17.03. You know that this interpretation is dead, and in fact, it is calling for silver to continue higher, but not necessarily in a massive, in a massive rally. It could be actually a chopped kind of attempt to rally, but hard going, slow going, if you like. That'll be 1, 2, 3, 4, 5 perhaps, and then an A, B, C like that, seeking to reach towards 17.45 over, let's say, 2-3 weeks. So it's going to be a relatively quiet market if that takes place. Now here's the chart of gold. That's the 30 minutes of gold. And you can already see that I am accounting for a possibility of an extension of the B. I'm showing you here the question mark. I'm not terribly sure. That is A, the same as we had it in silver. That is B. And the slide here is not terribly clear to me. That's why I started with a chart of silver. There are quite a few options here, but I'm convinced with a bit more price action, especially a break under this level, which must be taken as a very, very important level. It's right here, let's say 1260. Okay, and the next very important level for you to watch is right here, which is 1282.5. Okay, these are critical levels. Yeah, critical levels for you to watch. I would say that already gold coming down to check the floor here at 1264 is already bad sign. A bad sign for the bulls. That means it's silver is almost certainly going to break eventually under 1260 and will go sharply lower. The wave count, as I said, is not terribly clear to me. It is possible that in fact we are dealing here with like we had here a bunch of ABCX, ABC. We could have here an ABCX A, B, C. And then if it goes up above 1282.5, in fact it is going into that prolongation of the B. Okay, it's going into the prolongation of the B. At this stage, I am not thinking that we're going to have this. I could be flat wrong, but I do not think this is coming. I would say that if we get a rally that is very impulsive, okay, if we get a rally that is very impulsive where the barrier that I'm showing you here at 1282.5 would not look like a barrier, it'll, let's say, skim through that, it'll fly through, then I'm going to have a rethink. Yeah, I'm going to have a rethink, and perhaps, of course, I missed something, and this will call for a reassessment of the wave count, but a strong rally above this level could tilt the odds into something that would see gold heading towards perhaps 1336, 1332. Okay, as it is going to extend the B in a way that will send gold higher rather than sideways. Okay, so that's the situation in gold. I'm going to show you the 5 minutes. And here's the 5 minutes. The way I worked it out on the 5 minute scale, we can even see the 1 minute. You know what? Let's go and see the 1 minute. And you will see how I subdivided it. See what you think. This is the 1 minute scale. Right from here, I have 1, 2, I have 3, I have 4, I have 5. I have A, I have B, squeezed right here. That's my B, that's my A, that's my B, that's a 1, 2, that's a 3, 4, and that's 1, 2, 3, 4, 5 complete. Okay, yeah, it could pop up here a bit, but essentially, gold coming down, breaking back under 1269. It's quite a good sign that it's on its way to break to the floor and potentially go a lot lower. Okay, so that is 1 minute scale. Should be quite helpful if you are trading very short term. You got here the entire set of the critical levels that I mentioned right here. Do you remember? 1282.5. Okay, riding above that will tell you there's more upside coming. Breaking under that level tells you look down, potentially look down big.